Now, you're live.
Hi, didn't see you there. My name is Daniel. Welcome to the weekly Monday at 11 a.m. Central Time real estate investing live Q&A located here in Warrenville, Illinois, United States of America, in a galaxy far, far away. Wow, But if you guys have any real estate investing questions to start off, we're going to go ahead and kick it off a little earlier to honor the people that are in the chat right now. I was told that there is about 8 to 10 people patiently waiting for my presence to bless them. So let's go ahead and get started, guys. In all seriousness, if you guys have any real estate investing questions, I'm here for the next hour. It's our weekly 11 a.m. Central Time real estate investing live Q&A session. Why don't I go ahead and start us off with some very important announcement, and I'll go ahead and start off with some market news. If I don't hear any real estate investing questions, that's kind of what I'll do. But until then, I'll go ahead and spew off some announcements. But yeah, go ahead right now, guys. Feel free to put in your real estate investing questions. Let's go ahead and check. Okay, cool. So we got a good number of people watching right now. Feel free to go ahead, guys, and say your questions on real estate investing. Some quick announcements real quick. We did release our free owner financing class about a couple of weeks ago. And this past weekend, actually, on Friday, we had our very own in-house tax professional, Mr. Steve Hamilton, come in, and we actually did about an hour segment that will probably be realistically around 40 to 45 minutes on seller financing. So we talked about everything. We talked about depreciation recapture. We talked about capital gains tax rate, ordinary income. We talked about basically everything under the sun when it comes to tax and legal, when it comes to the tax aspects of seller financing. And we also talked about the top 3 things that real estate investors completely miss and things that they need to know. The top 3 things that real estate investors need to know when it comes to taxes and tax and legal. And we're going to put that YouTube video out shortly, so be in tune for that. So we got a question already right now from Theodore Bernard. Good morning, Theodore. How are you? What are my thoughts on condos? So condos and I have a love-hate relationship. For me particularly, I'm not the biggest fan of condos because, when I buy something like a condo or, something that's basically not a house, like something that I can't depreciate, right? I typically like to buy apartments because I'm getting more units, right, under one income stream. If I'm buying a condo, I'm running the risk of potential terrible neighbors, shared walls with other tenants that I can't control. I'm also running the risk of a potential association. So for me, my rule of thumb is I do not like to invest in associations. Same reason as to why I'm not a big fan of investing in the stock market, because I don't have control. I like to invest in things that I have control. Now, it's not because I'm a control freak, right? It's not that at all. Maybe there's part of me that is, right? But the reason why I like to have control in investing is because for me, I like knowledge. I like learning, and I like applying the knowledge that I learn. If I don't have control, right, I don't have the keys to the kingdom in terms of being able to apply my knowledge. So imagine, right, and again, I hear this a lot. I hear this a lot with individuals who invest in stocks, who have a lot of money, but they go through a stock broker. And I'm not overly fond of that scenario, because if you're working with a stock broker, you're talking about an individual who's financially incentivized to tell you a certain thing. Also, they're financially incentivized to sell products that they are licensed in. At the end of the day, I'm sorry to tell you, no matter how good your financial planner, is for you or a stockbroker is for you, at the end of the day, I've yet to meet a whole lot of financial planners or stockbrokers that have the client's best individual interest in mind, i.e., a lot of doctors, a lot of high W-2 income earners who, for some reason, the financial planner never mentions real estate, because real estate, out of all asset classes, one of the things that's undeniable is the tax advantages of owning real estate compared to stocks, bonds, mutual funds, even bonds, mutual bonds, right? Or even, municipal bonds is the right word I'm thinking. So for me, be careful about giving up that control. And when you're investing in a condo association, a lot of times you're not the one that has control. I have a friend of mine who actually bought a condo and he wanted to Airbnb out the condo. Had a lot of great plans, bought a lot of furniture, some nice couches, chairs, a grill on the balcony, you name it. And did pretty well his first month. Made about $5,000-$6,000 that first month on a condo. The association shut him down just because they couldn't control. And it's not because his tenants, his Airbnb tenants had issues. It's because they just didn't like the idea. They thought it was risky. So, I always say invest things that you have control over. If it's a good condo, there's no association whatsoever. Or you have the ability to control the association by buying multiple condos, then yes, treat it like buying multiple units on an apartment building. But a lot of times with condos, you do get a higher quality level of tenant. So I do like that. But there's a lot of risk that's involved, especially when you're buying into an association. How will the potential Fed cut affect the mortgage rate? So for those of you guys that are watching that don't know what that question is referring to, a potential Fed cut means the potential cut in the Federal Reserve lending rate. Now, what that means is that you and I borrow from what's called the friendly neighborhood bank. So you got banks like Chase, you got banks like PNC, Bank of America. We go down there, we get a commercial line, a commercial credit, a commercial loan or a mortgage loan. I.e., this example, Theodore is asking about how will the potential affect mortgage rates. So we go down to the bank, and whether we like it or not, even a guy like me who uses a lot of seller financing to buy his properties, I'm still affected by the bank in many ways, shape, or form, because what the bank does affects the buying power of a certain market in a very micro market aspect. A lot of competition on my end, right? So you got to think about that as well. Now, what the Fed cut means is that we borrow from a bank at, let's say, 5%. Reserve. The Federal Reserve is a company. It's a private. A lot of people think the Federal Reserve is a government entity. In many ways, it could be seen that way, but in many ways, by law, by what we observe on paper and what's tangible, it's not. The Federal Reserve actually has shareholders, and it's like a private company. And what it does is it lends money. It lends money to the bank. And these guys are the ones that print the money, and they lend to the bank at a certain rate. Right now, the Federal Reserve rate is at 2.5%, if I'm not mistaken. That is the rate that banks borrow from. So if the banks borrow money at a certain rate, that affects the rate in which we borrow money from the bank. Now, there is a potential Fed cut this July. I believe they're meeting. I'm not sure when they're meeting. It is July right now, but they're potentially cutting the rate by either 1.25% or 0.5%, one of those two. I do think, right, whether it's now or whether it's later this year, that a Fed cut is going to happen. It absolutely is going to happen. I think it is inevitable. The reason why they're doing it is they're trying to pump cash back into the economy. I don't know how that's going to look like when banks right now are very skeptical of the market in general. We're already seeing a lot of default rates go up in terms of people not being able to pay their loans. I think the banks right now are very scared. So I don't think it's going to do anything to the mortgage rate. I think even if the Federal Reserve cut the rates down, potentially 0.25%, and we also have to think about how much they cut it down by. If it's 0.25%, I personally don't foresee the banks moving the mortgage rate any lower. If it's at a significant cut, like 0.5 or 0.75, dare I say, I do believe that it will affect the way that banks handle mortgage rate to some degree. But we have a lot of things are up in the air right now. We're just gonna have to see, right? But thank you for the question. A very good question on the market. Any other questions, guys, on market, finances, real estate investing, particularly is what this Q&A is about. Any questions at all, guys? I'm open for business. All right, so let's go ahead. Until we have any questions, I'm gonna go ahead and do some FAQs, some frequently asked questions. So, my jaw is really tight. One of the things that I hear a lot in terms of the questioning, I hear a lot of individuals asking me, what is the thing to invest in? What is the thing to invest in? And for the good chunk of you, I think I saw like 10 or 12 people online right now. Now, it's a little lower than our usual number, which is why I'm going to give out more nuggets. So usually when there's less people, and it actually does stay true even when I run certain masterminds, is the less people there are, the more valuable content I like to give. So because there's less people here than usual, I'm going to give a golden nugget to you guys. So one of the things that I live by, one of the most philosophical and one of the most important investing concepts that I live by, I swear by, is when everyone's going left, you go right. I repeat, when everyone is going left, you go right. So Warren Buffett, arguably the greatest of all time, the GOAT of investing, says that when everyone goes left, you go right. Now, what does that mean in real estate? What do I mean by that? There's a lot of individuals, we gotta reverse engineer. One of the things I enjoy is reverse engineering, to see your thought process, to learn yourself a little bit more. Is you gotta reverse engineer what a lot of people are doing. So what are people going after right now in the world of real estate investing? Well, I can tell you for a fact, a lot of people are going after multifamily buildings. They're going after apartment complexes, particularly the 100 plus unit apartment complex buildings is what I'm seeing a lot of, especially a lot of these large real estate funds that have a lot of capital they raised, and they need to allocate that like soon. They need to allocate that right now. And I foresee a lot of overpricing with a lot of on-market 100 plus unit assets on top, and I'm seeing that lingering. I see that lingering towards the off-market brand as well. A lot of the off-market 100 plus units, I'm seeing a lot of these big real estate funds going after them. I think that's very dangerous. I also see a lot of FHA hotspots being overvalued in housing, i.e. doing fix and flips in Virginia in a very hot spot for FHA. A lot of my properties are appreciating tens of thousands of dollars every single month. It's really remarkable for me because it means it is more money for me. But at the same time, for real estate investors, we got to be careful. So one of the things that I'm advocating for right now is find an exit strategy that not a lot of people do. It is a creative exit strategy in which you could increase your cash flow more than the traditional rental, and you buy it in a housing market that isn't hot-bedded, meaning that it isn't hot, right? Or it is hot, but it's not overrun by cheap financing like FHA. It's overrun potentially by demand, such as development. Now, of course, we never want to buy on appreciation alone, but it is a plus, right? But you never want to buy, again, never buy on appreciation. Only do it if you have a creative financing strategy or a creative exit strategy, or both, in which you minimize your downturn, you minimize your downside on a monthly basis. You take care of the downside, but you maximize the amount of income that you could potentially make, i.e. like an Airbnb business, like what I'm doing right now, right? I got an Airbnb in Indiana. In Indiana, and it's killing, right? In July, we were supposed to make only about $3,000. We've made around $6,000 or $7,000 this year. We've actually doubled our projected income, which is phenomenal, which is absolutely phenomenal. All right, guys, any real estate investing questions? Let's see how many people we have on the line. Oh, I never mentioned our announcements. I told you that we were going to do announcements. I never really did announcements. So the free owner financing class is out right now. That was out 2 weeks ago. It's about 90 minutes, so treat it as a movie. It's about 90 minutes of really good owner financing content. Like, I honestly don't know, other than our actual owner financing class that's in our Kwak Brothers education program. That class is about 2 to 3 hours long. It is a little bit more in depth, and it also shares a little bit more of my techniques. But in this free owner financing class, it's about an hour and a half. In terms of pound for pound, I don't know if there's any other class out there on owner financing that does a better job at teaching people what is owner financing, what are the ins and outs of owner financing, how to negotiate for it, what are the benefits, what are the cons, the pros and cons of every like I honestly don't know if there's any other class on contract for deed or owner financing, seller financing, whatever you want to call it. I don't know if there's a class out there that can match this. Like I'm just so, and I know like I'm a little biased because obviously, I made it, but man, it is super good. It is super, super good. Brandon Howard said, I signed up for it. Will that be emailed? Yeah, you should have gotten an email, or go to the kwakbrothers.com and go to resources. It should be there. Matter of fact, let me double check that for you right now. .com. Let's see. I'm gonna get that answer for you, Brandon. Okay, cool. So you signed up for it. Let's see, yeah, you should have an email to you. Yeah, so you put in. Let's see. Yeah, you should get an email to you pretty soon. If not, I'll go ahead and reach out to one of our staff members and make sure you get it. Just make sure if you don't get it, then feel free to just email me at info@thekwakbrothers.com. That's info@thekwakbrothers.com. Right, and I'm sure you could see it in the links below or the frame. I don't know where the frames are, but I'm sure you'll be able to find it pretty soon. And it'll pretty much be self-evident. Other than that, so free owner financing course is out. As always, our education course is out. As always, Kwak Brothers Real Estate Investing Accelerator. So if you guys are looking to accelerate your real estate investing business, it's pretty much everything that I learned from multiple real estate investing education companies that I bought, which in the beginning, I spent almost 6 figures on real estate investing education alone. And also my personal experiences. We'll be sharing all that for a low cost of $500, which by the way is the lowest real estate investing education course for what it offers. That is also our highest real estate investing education curriculum. So it's our best and it's our only. We're offering it for $500. We're literally offering the same value and the same knowledge that I've seen other real estate investing education companies offer for 20 grand, 50 grand, 70 grand. The lowest price I've seen is 20 grand that offers this amount of value that we offer in just $500. So feel free to go ahead and check that out. Go to thekwakbrothers.com/programs or go to thekwakbrothers.com and click on programs. You'll be able to get information there as well. Thank you so much, Brandon. Appreciate that. Appreciate the comment. Other than that, obviously we do this every week, 11 a.m. Central Time, Real Estate Investing Live Q&A. We've got Robert Madrid, who's got a question. Hey, Robert's actually a really good friend of mine. What would you say is the best way to go out there and find private investor dollars? Facebook, Instagram, Craigslist. So in my opinion, I always say find ways to have influence, and one of the things that I tell people all the time, for individuals who ask, how do I raise capital? For me, a part of the answer to that question is, well, if you're out there actively networking, and literally just find ways and avenues to create as much value for people as possible. Like even the real estate investing education program that I started, I've gotten more investors, even my one-on-one clients, I've gotten more investors today because I started that education program and I'm constantly providing value and doing free stuff. Like even in this real estate live Q&A session, I actually had an investor reach out to me because I do this every single day, or I'm sorry, not every single day, but every single week at 11 a.m. Central Time. So I've had a lot of people reach out to me. But even like meetup groups, I started my own meetup group. I've had people want to invest because I started masterminds and I started meetup groups before. So the best way to go out there and find private capital is bring them to you, right? So even on Facebook, like providing a lot of value in a Facebook group, that helps as well. But you're kind of, in that case, you're kind of working someone else's group, and they may have more influence than you per se. They might be in the spotlight more than you per se. So that might not be the best option. But I always say look to create value in your war market. So the people you already know right now and your friends and family. learn to create value in public places like a meetup, a mastermind that you go to face. I always prefer face because it's easier to build that relationship. But if you want to do it online, going to places like online forums and providing values, especially in Facebook groups and other online platforms, is the way to go to create relationships. So I always say, if you want to find private investor dollars, always look to provide value and simply be the person, right? Be the person that you want, that you would invest dollars into. So what do I mean by that? It means be so good, right? Know a lot in real estate investing. Be so good at putting a deal together that even you would invest your own dollars into, right? Are you the investor right now? Are you a good enough real estate investor right now to the point where if you had $1 million of your own, you would use it for your own deals instead of investing it with somebody else, right? You got to think about the security in that, right? Like, do you have the same success rate as somebody who, that you look up to, right? Maybe not, but you definitely want to get there before you start putting millions of dollars of other people's money, especially their life savings, at work. So good question though. Thank you, Robert. It's good to see you again. All right, guys, let's keep it coming. It's only been 20 minutes. I got 30, 40 left in me. All right, let's go ahead and continue. What else? Announcements. Let me see. We could talk about the market. We could talk about what's going on in the market right now. Obviously, the stock market is doing really well. Let's talk about this. Foreign capital going into the real estate market. That's been happening a lot for the last 3 to 5 years. I've seen a lot, based on my observation, and when I'm looking at, a lot of money is coming from foreign places, investing in United States real estate, especially Chinese money, especially because in Hong Kong and a lot of these metropolitan Chinese real estate markets, I'm sure the return is not as good as even if you were to go to California. Like if you go to California, you're buying buildings, easy 4% cap rate. I've even seen some foreign money going into buildings here in the Midwest. Like, for example, excuse me. Man, I might need an energy drink. I have seen, to give you an example, a 24-unit building, actually about 15 minutes from where I live in Illinois. It got picked up by a group from California that is backed by Chinese money, and they astronomically overpaid. And to give you an idea, I thought the building was worth $900,000. It was a 24-unit building. I genuinely thought, based on comps, based on cap rate, based on me knowing this market extremely well, and me owning like 42 units in this town alone, compiled of 3 different buildings. I thought the building was worth $900,000. Right? I offered $750 because there was about 150. My offer, $1.5 million on a building that I thought was genuinely worth $900,000. I offered $750. These guys paid $1.5 million, and they bought it at an astounding 5% cap rate. An astounding 5% cap rate. And there's a lot of work that needs to be done. There is about $150,000 that needs to be done. If anything, I think there's about $200,000, but I didn't want to take too much off the asking price because I did want the building. But man, it was a piece of work. I mean, $1.5 million. So a lot of foreign capital has gone into it, which it is driving up prices. So that does worry me a little bit. But I think it is going to wear off once the downturn does happen. I think a lot of foreign money will back off. Potentially, it will be good for me because it will allow me to get back in the apartment complex game. Robert again asked, if the Fed cuts rates, do you think that QE puts off the correction? Or do you think that doesn't change the time frame but only makes it worse? So Robert, QE means quantitative easing for a lot of other people that are not knowing what they're talking about. So quantitative easing is basically a mass process in which government entities basically give out IOUs, right? And it's a way to overfund the dollar into the economy. But a lot of people who said that quantitative easing is going to be the death of us, I don't know if I agree with that. I was watching a very interesting video by Ken Fisher, which is a billionaire investor, and he was saying that the quantitative easing is not as effective and it's not as influential as people think, because a lot of people were saying that, well, the quantitative easing process did happen and did pump billions of dollars into the market, but yet why was the inflation rate the same? Why was the dollar the same value? It's not as powerful. Where did that money go? Someone has to have an answer for that. So I don't think quantitative easing is going to put off the correction as much. If anything, they might just kick the can down the road and issue even more 10-year treasury bonds. I don't know what they could do at this point, because they issued them out at 0% when 2008, 2009, 2010 happened, which is why I say that Obama was arguably the worst president economically speaking. Great guy, awesome basketball player, probably the coolest president we ever had. But economically speaking, you can't make the argument that he was a good economical president. You just can't. When it came to form, he just didn't have a backbone. Especially when you read about the deals that he wrote, and especially if you read about the tax administration did in 2008 to 2010, really kind of screwed the pooch, economically speaking. So I don't know what they can do at this point, especially since the bonds that Obama issued out 10 years ago are coming up due next year. A lot of people are saying that we're going to move on to Bitcoin as the new currency. I don't know. Do I think that quantitative easing puts off I don't think so. I think at this point, the deficit is too much. The damage is too much. I don't know what it could do, unless it's going to have to be at a really high scale. But of course, even with that high scale, you're only really just kicking the can down the road again. It's unfortunate, but that's the way it is. Let's have a real estate investing question. Let's do that. Let's do a real estate investing question. I love market. I can talk about markets and finance all day long, but let's make this a real estate investing time. There's about 15 people watching right now. That means 15 people are very happy with their financial situation and they need no help in real estate investing. Let's see. Come on, folks. I got a good 20 minutes left in me. 30 minutes left in me. If not, I can just end the chat right now. I'll go home. I'll make myself lunch, come back to the office, check my emails. I got a couple of coaching clients that I'm doing calls with today. Checking out the market, always doing that. All right, keeping my investors updated is what we're doing. Got to talk to my project manager out in the East Coast. That's something that I do. Oh, a lot of people ask, great credit and capital for down payment. Should I still do owner financing? I'll go ahead and answer that question. But one of the common questions that I do get frequently is, Daniel, what does your schedule look like on a daily basis? So here's what I do. So my days are very inconsistent. There's days where today I woke up at 9 a.m., which is late. But there's days, where I'll wake up at 6 a.m. There's days where I'll wake up at 4 a.m., just because that's just the way my life is. What is consistent though is I don't get much sleep. Typically, I start out the day with kind of a large headache, and it's just like it just kind of stings, But if I get 6, I'm sharp. Like I'm very sharp. If I get 5 or 6, like I got 5 hours of sleep last night. If I get 5 or 6 hours of sleep, like I'm very sharp, and I'm like sharp as a tack. But at the same time, I know it's not good for my body. So typically, what's a typical day for me is I'll wake up around 8 o'clock, 7:30, 8 o'clock. I usually don't eat breakfast. I'll, typically get like a smoothie or something like that, but, that's pretty rare that I get a smoothie. I'll typically just start off the day with no breakfast, usually come to the office, get all my work done, check my emails. That's first. If it's Monday, obviously I do this Q&A session for you guys. I do a couple coaching sessions. I do a couple meetings Then in the afternoons around lunchtime is where I have a lot of my meetings. I talk to sellers, investors, potential partners, people that I mentor, my pastor, so usually around those 5 groups of people I have a lunch meeting with. And usually around 1 o'clock, 2 o'clock, I hit the gym because that's when no one's there. So that's probably what I'll do today. Around 1 o'clock, 1:30, I'll hit the gym, come back here at 3 just in time for my coaching call. I hit the gym just because, I like to do something in the middle of the day that gets me energized, that gets me going, and after my gym time, I usually have another meal. I'll have a protein shake, get to the office, go there from about, 3 to 7, 8 o'clock, and what I'll usually do is I'll read up on what's going on with the market. I'll design curriculum for our clients. I'll record stuff for our channel, deals that I'm working on, and anything that I had the meeting beforehand. So all the meetings I had in the morning and in the lunchtime, the action plans that I got away from those meetings, this is when I'll usually do between 3 to 7. Usually around 7 o'clock, I'll start my reading. So, I'll read interesting books on real estate investing, looking to better myself. Usually at 8 o'clock, I'll go to church, or there's a church service, usually around 6 or 7. And then I'll go home and I'll do more reading, and I'll kind of just hang out, play basketball, whatever it is. But every day I try to work around 12 hours a day, just because that's an entrepreneur. I got to pick my schedule, but usually my days is pretty inconsistent. All right. Would you consider, with great credit and capital for down payment, should I still do owner financing? So here's the thing. Here's the mistake I see a lot of people making with owner financing is I hear a lot of people asking, should I do owner financing? And do usually put a specific scenario beforehand. Here's what I think about owner financing. At the end of the day, owner financing is a great tool to create a win-win situation. So when you're saying, should I do owner financing? You're forgetting the other 50% of that spectrum, which is the seller. You need a seller to do seller financing, right? So for me, like I always say, when people ask me, should I do seller financing? I always say, it depends. Who's your seller? Do they need seller financing? If it's somebody that is genuinely benefiting off doing owner financing with you, then great, do it. But if it's an individual, they need cash, they're in a scenario in life where they need the liquidity, then go to a bank. Use that great capital, use that great credit, and go to a bank, So, it always depends. Now, if you need help negotiating owner financing, obviously the class helps. And Brandon, if you're actually interested, feel free to reach out to me at info@thekwakbrothers.com. If you want to actually purchase our education, it sounds like you're able to. If you're a student already, then email me anyways, and I'll help you personally myself be a better negotiator for owner financing. But Brandon, feel free to email me at info@thekwakbrothers, and I'll actually reply to you with my personal email, and we'll get a conversation going on how I can help you with that. Theodore asks, would you consider buying a house with cash and refinance to get your money back out? No. Because right now where we are in the market, a lot of single family houses are overvalued. So for me, it's like, why buy a house with cash if you're gonna refinance it out anyways? Just get a loan. Just get a commercial loan or buy it on a line of credit, or use the cash you have right now to leverage it and get a secure line of credit at 8%, simple interest, or 7% simple interest, depending on where you are financially. You may get a better rate than 8%, right? But I know 7-8% is the standard right now for business lines of credit dedicated towards real estate investing. So yeah, do that. But yeah, I don't know. I'm not big on buying a property cash and then refinance. It's kind of just it's very contradictory unless you got a very unique strategy that you're doing it with. Yeah. To get owner financing, does the property owner have to own the property outright? So that's actually one of the myths that we uncover, Nolan, in our free, I repeat, free at last, right? In our free owner financing class. So Nolan, feel free to go to thekwakbrothers.com. Go there, click on free stuff. You will see the free owner financing class. Feel free to get that class. I'd rather give you an hour and a half answer than give you a 5-second answer right now. Hello, came across your channel on YouTube. I'm new to investing in general. What is a good place to start? Do you offer coaching classes? Yeah, Jorge, I do. feel free to email me at info@thekwakbrothers.com. Do it right now while you're on your phone. That way, as soon as I get off the live stream, I'll be able to check it. I'll be able to check my emails. And that also goes for you, Nolan, and also Brandon. Feel free to email info@thekwakbrothers.com right now with your name as the subject line, and I'll kind of know what you're referring to. Yeah, email me right now. That way, when I get off this call, right, when I get off this live stream, I'll be able to respond to you guys like right away. You know, instead of you being having the, you know, because I get a lot of emails every single day. Just so you know, especially at info@the Kwak Brothers, I get a lot of emails every single day. And I do have somebody that takes care of it for me. So I'll go ahead and email you right back, especially after this call is done. I find myself looking at a ton of YouTube videos, listening to podcasts about real estate, but never dive in. My wife and I make a good income, have great credit, but I don't know where we're blessed with. So yeah, Jorge, you are literally the perfect person that I usually work with. You know, you're literally the ideal, you know, clientele. So email me at info@thekwakbrothers.com. I do offer coaching at a rather affordable price. And temporarily, between now and December 31st, I am offering unlimited sessions, meaning that you get lifetime access to me as a coach, meaning that I'll be 30 years old, I'll be 40 years old, and you can still be booking coaching sessions. So I do offer that. Email me at info@thekwakbrothers.com, and I'll be able to have a conversation with you, Jorge, and we'll go ahead and get started right away. All right. Any other real estate investing questions, guys? Let's keep it coming. I think we're at about like the 40-minute mark, but dude, I can go all day long, right? I actually used to run mastermind sessions that started at around 9:30 p.m. and the latest I ran a mastermind session was to 3 a.m. We went 5.5 hours. 5.5 hours of me just training, exercises, you know, simulations. I love it. I can go all day long. This is what I do. I love helping people. So we're about the 45-minute mark. Well, if you guys don't have any other questions, I'll guess I'll go ahead and say some announcements, ending remarks, and Jorge, cool, just emailed you. Perfect. Let me see if I got the email actually. Okay, cool. So Joel said he's gonna check it. So that's awesome. That's really cool. We'll go ahead and we'll talk. And so if you guys don't have any questions, guys, I'll go ahead and close this live stream out. So as always, guys, the free owner financing class is out, and I'm also thinking about, do you have the online? Yeah, absolutely, we do. So that's part of our Debt Accelerator program. So again, feel free to email info@the Kwak Brothers, and Joel will be able to help you out with the all-in-one HELOC in the Debt Accelerator. And again, let me know, guys. Let me know in the live stream right now while I have you all here. While we have 20 people. I'm thinking about offering another free class. So we put out a free class on owner financing. You know, it's probably bar none the best free class that's out there regarding the topic. What is a free class that you want me to release out next, right? I'm looking to put out another free course for you guys. You know, what is the next topic that you want me to cover next that is going to be free for you guys, right? Let me know, right? So Robert said, and that one was freaking epic. So Robert loved that class, the owner financing class. He loved it. I loved it. I honestly think it's one of the best things we've ever put out in terms of value and content. Let me know, guys, while I have you here right now, what do you guys want us to release next for free? You know, what is the topic of discussion that you want me to make a class on that you want me to put out for free? So let me know in the comment section below, or feel free to email me at info@thekwakbrothers.com with that question or with that answer. What do you want us to release out the next class that is completely free? Other than that, guys, thank you guys so much. I'll see you guys next Monday at 11 a.m. Central Time. Much love to you. Love you guys. Always praying for you. Crush it this week, and I hope you guys have a blessed day.